Okay, so what I'm going to do is I'm going to mark that high there, and then what I'm going to do is I'm going to look for a pullback to this particular level. If I get a pullback to this particular level, I'm going to be a buyer. Why is that? Well, it's pretty simple. If you have something that is moving so extreme, gold moved $50 in a period of an hour, less than an hour, but then it hit a level and just pulled back out of thin air, well, that tells you two things. It tells you either A, it was a price level where the buyers felt, hey, this is a little extreme, we're going to take some profit before we re-enter the market. So that's scenario A. Or scenario B is the seller said, hey, this is too extreme, we're going to push back a little bit. We believe that this is overvalued, so we're going to enter the market and push back. Either one of those scenarios tells me it's a very critical level from a price action perspective. And that is a very good chance that the market is going to pull back to this level. It's what I often call a gravity point of sorts. We talked about this the last time. So I'm looking for the market to pull back to this level. If it does, I'm going to be a buyer. I actually wrote about this when the price action was up here. I wrote about on my blog ahead of time, hey, if you're an intraday trader on gold, watch for market to pull back to this level, look to buy, and then look to go long. And what did I say? I said target 1750. What did I say? Put your stops just below this swing point here. Well, let's see how this played out. I wrote about this ahead of time. This is not something I said after. I wrote about it ahead of time. What did the market do? Pulled up a little bit higher. And then, I got to zoom out a little bit. There we go. Okay, so here's the 1703 right here. After a little bit of choppiness, look what happens the next session. To start off the London Open. Market pulls right back to the 1703 level, creates a nice pin bar formation telling us after aggressive selling, look at this. This is aggressive selling to start the London Open. The first candle we see is selling, 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 all rejections off the 20 MA. Then the market starts to sell even more aggressive, telling us there's greater participation on the sell side. The market opens, doesn't go up one tick, sells off, hits the level, then rejects off of it completely. Goes sideways, goes right back to the level, gives you a second entry, and then look what happens. The buyers say, guess what? This is our chance to get back in. We recognize this is a clear level. Boom. Market takes off. Can everybody see how that was just an easy trade setup from the beginning? Anytime I see that and I see the pullbacks to this level, especially with a rejection like this, I'm going to buy that. I'm going to buy that, and I'm going to take it either to the prior swing highs, or I'm going to target another key support or resistance level that I already mapped out. The one that I mapped out, 1750. In this case, but in this case, I didn't go for the 1750. I just went for a 2-to-1 in relationship to my stop. Where did I place my stop? Pretty simple. Here was where the rejection was that I talked about. Here was the pullback level. Very simple. Stop just below this, a few ticks below it. Well, that gives me what? An $11 stop on gold. So I need at least a $22 target. Pretty simple. Lenny G has a question. Where exactly did you enter on this level right here? I took the exact pullback to this level. Put it in order here. That was it. It actually didn't trigger until London. Actually, the first hour, first 20 minutes of London. But it triggered. Pretty simple. Stop below that. I had a little bit over 2-to-1 target on that. I think I adjusted it to about 2.5-to-1, which put me at about $25, $26 target. So you're talking 703, or that would be 1703 plus 25. It was about, I think I went to 1727. I'll have to look on my trade log. I don't have it open. But you're talking further up there. And hit it later in the day. Talking right up here. Went to 1730 for the high of the day. I think it even went a little bit past it, but yeah, just a little bit past it. So can everybody see that little formation here? It's a pretty simple formation. Can everybody see? This is the event. This is the unique price action environment. It finally hits a rejection level. This is a key swing point, pulls back to key level. I mark these levels and look for it to pull back there. I'm a buyer. When it hits that, I'm a buyer. Especially with that kind of rejection, double bottom, great confirmation that this is the key line in the sand. This is not a difficult trade setup to find. In fact, what does it resemble? What other price action formation have I talked about many times that it resembles? Anybody remember? Who remembers? Michael says BPC. What's a BPC? Okay. Yes, exactly. Breakout, I think, breakout, pullback, continuation. Exactly. Ganser, Gabriel. Well done to all of you. That breakout pullback or that breakout retest, it works on any time frame. It doesn't matter whether it's a 3-minute, 5-minute, 1 hour, 4 hour daily. This is a classic example of it.